Hey everyone, it's Denise Donahue, the Mortgage Nerd, and today I'm going to talk to you about your escrow account. It is super confusing. I get this question asked all the time. So I've got my whiteboard behind me. We're going to draw that out and hopefully I can help make sense of it. When you're buying new construction, setting up your escrow account can be done in one of two ways, and that's what I want to explain to you. So let's just say, first of all, your escrow account is what holds your taxes and insurance. It's like a fancy way of saying savings account. So every single month when you make your mortgage payment, the portion for your taxes and your insurance go into this savings account. And then at the end of the year, your lender will pay the taxes and the insurance. So the taxes, the bill comes out in Texas every November and they pay it for you at the end of the year. But what if you're buying a home? Let's say you're buying a new construction home in July. How should you set your escrow account up? Well, here's what I'm going to show you. So right now you've got a piece of land. And let's assume that there's no completed house. There may be some framework of a house, but the house hasn't been complete. And let's assume the property taxes on this land only, because there hasn't been a home, is $1,200 per year. So basically what that means is that the builder owns this property, which is land only, and they're paying $1,200 a year for that land. When they sell it to you, you're gonna file a deed, or the title company's gonna file the deed, and that's when the title company and the county is now aware that there is a house on that piece of land. And so let's assume, let's just be drastic, let's assume that the property taxes with this house value goes from $1,200 to $12,000. That's what they're saying that they're basing the property taxes off of, because the value of that piece of property now includes the home. So how can I set my escrow account up? Well, let's assume that we're in July and you're closing on a home in July. You can set your escrow account up, which means you can set your monthly payment up based on current tax value, which right now is just the land. That's based on a $1,200 annual taxes. Or you can set it up based on what it is going to be when the deed gets filed, which is $12,000 a year. But how you set your monthly payment up actually impacts your bottom line, and that's what drives people crazy and is hard to explain. So let me explain this to you. Let's say we set your escrow account based on $100 a month, because $100 a month means that by the end of the year, you would have paid $1,200. And so what happens is you make $100 a month, the lender goes in and writes the check of $1,200 and they pay the taxes for you. So you've got January, February, March, April, May, June, and July. This is the month you're closing in. Well, your property taxes aren't going to be due until November. So when the property taxes are due, the county's going to come to you because they see that you're the owner of this property now, and they're going to go to you for the tax bill. Well, how much are the taxes? The taxes are going to be $100 a month, because keep in mind it's land only up until $100, $100 until we get here, because now we have the house and now it's $1,000. So basically it's $100 times 6, so it's $600 of taxes, and then you have July, August, September, October, November, and December that would actually be at a monthly rate of $1,000 a month. And so when the tax bill comes out, when we go to closing, you're going to get a credit, because right here is where you become the owner of record. So when you go to closing, the builder is going to give you a credit of $100 a month up until the month that you close. So if you closed in April, it's the same theory. You're going to get the credit of $100 a month until right here. And so here's how it affects your bottom line, because the lender can only set your escrow account up in one of two ways. If we set it up based on land only, then when we fund your deposit for your escrow account, because we have to get a 3-month deposit, we have to base the credits and the debits based on that same factor. So if we set your mortgage payment up based on current value, then you're going to be paying $100 a month. Once this closes, once you make your August payment, if you're only paying $100 a month, guess what? That means that you're going to be short $900 in August, September, October, November, because if we set it up based on current value of $100, when you make this payment and this payment and this payment, the county knows that you built a house on there, but they don't come back to you until the following year when they do an escrow analysis. And so your account is going to be short, and that can be frustrating. Or you take that extra money, the $900, and you put it in a savings account. So when the county does get notified and they say, hey, you're short in your escrow account, you owe us $900 times 6, and it's March of next year, and you're freaking out because you're like, oh my gosh, I don't have that money. Well, we're telling you, you need to save that money because we're setting your payment up based on current tax value. If you want us to set it up on the actual taxes, here's where it gets tricky. So let's say you say, no, I don't want to be short in my escrow account, Denise. That sounds horrible. I want to set it up with a regular payment. Well, if we do that, if we set it up so that you pay $1,000 a month, what that means is that we have to also collect $1,000 for the whole year, and the builder's only going to give you a credit for $100 a month. Because we don't have a way of telling the county, it's one way or the other. We have to set it up $1,000 a month, which means overfunding your escrow account, because that means we're going to collect 7 months at $1,000 a month, but you're only going to get a credit from the builder of $100 because they're only going to credit you what they've been paying. And so when the tax bill comes out in November, then they're going to say, whoa, you've got way too much money in here. We need to give you a refund. And so it's like you're either overpaying your escrow account until the analysis gets done, or your payment is short until the analysis gets done. The best of both worlds, if you can be self-disciplined enough, is that we set it up based on the land value, which means it's going to show a really cheap payment, but that way you're not having to overfund an escrow account, because when you get towards the end of the year, we're talking a lot of money. We're talking thousands of dollars that people don't have. So if we set it up based on current value of $100 a month, just know you're going to have to save this money, and that way you don't have to overfund the account, and you're not going to be shocked at the surprise when your escrow account is short because you've put that money away. And we can tell you exactly how much money you need to put away, but that's how the escrow accounts work, and how you either get a refund, which means you overfund the account, or your escrow account is short. And I can't tell you how many calls we get from clients that bought a home, new construction, and the lender never told them to set aside that extra money. They just thought they got a really super cheap mortgage payment, and they were shocked. And they got a statement in the mail around March and April saying, you owe us thousands of dollars. And they said, my lender never told me that. They just set my payment up. I had no idea. Well, you hear those stories because they set the payment up right. They set it up based on current tax value, which is technically what a lender is supposed to do, but they should have informed you that as soon as you close on your loan and the county sees that there's a house there, now that piece of property is a lot more valuable. So this is a very confusing topic. Please feel free to give us a call if you have any questions about it. It is confusing, so you're not the only one. We have this video to hopefully help make it easier to understand. But tomato, you either overfund the account or you don't. You either set your payment up with the lower payment and you save, or you don't. So let us know if you have any questions. Thanks for tuning in. Take care.